Hello investors and future investors, welcome back to the channel. In today's video I will go over my opinion of the best option strategies for a recession and the stocks I'm watching to enter some positions. If you're new to the channel, thanks for stopping by. On this channel we help you with option strategies and other investments that can give you consistent revenue. We can all make weekly revenue if we put our mind to work, so I'll definitely show you what I'm doing on my end to generate revenue. Now, all I ask in return for this free content is an early thumbs up by you hitting the like button, and consider subscribing for more ways to increase your investment gains. Welcome to Investment Gains. Let's jump right into it. So as you know, on this channel I showcase option strategies that are very easy to understand, and I try to keep everything very simple so even new investors or traders can understand. That being said, what is a recession? I'm sure you keep hearing this word being thrown around, but do you actually know what it means? Let's take it from the top. A recession is considered a reality when 2 consecutive quarters of negative GDP growth has been achieved. We're already in 1 quarter of negative GDP, and within a few days we will know for sure if we have hit a 2nd quarter of negative growth. Before I showcase my recession strategies, give me 1 minute to explain GDP. Now, GDP is an acronym for Gross Domestic Product, and this is simply the money measure of the market value of all final goods and services produced in a specific time period per country. Let me break it down. So, in a quarter or 3 months, a country has sold 3 bananas at $1 per banana and have given 4 car washes for $5 per car wash. Then the GDP is simply $23. It's that simple. Now, to bring this into reality, all you need to do is replace the small numbers I use as an example with billions of dollars. If I have explained this in a way that you understand, please leave me a comment below. No one, I repeat, no one knows if a recession is going to be actualized or not, but as traders we have to keep moving forward. We do see all signs though that are pointing to a recession. So with that being said, here is strategy number 1. So this strategy is being cash heavy, and by being cash heavy I mean selling your stocks or your options and holding on to cash in your brokerage account. The reason you may do this is because you're fearful or you're waiting for an opportunity to buy stocks at a lower price. This is not our strategy because, as you know, on this channel we love making weekly income. So hence comes strategy number 2. So strategy number 2, and which is going to be my favorite of the 3 I'm going to bring to you in this video, is cash secured puts. This is an option strategy in which you pretty much try to benefit from the market going down. Now I do have a few videos of this strategy, so I'll create a link above and I'll also leave it in the description below. And let's also go over a live example. Now, number 1 rule for buying a cash secured put: please buy a cash secured put in a company in which you intend on owning. So there are a couple stocks I have been watching, and I'm going to give you examples if you have small accounts. So we're going to start off with ChargePoint, ticker CHPT. So here we are on ChargePoint, and I'm going to show you how to go about selling a cash secured put. So we're going to go into trade ChargePoint options. We're going to wait for the options chain to open, and then we're going to start. Now the first thing we want to do is go over to sell and put, and we're going to choose the expiration date of July 15th, which is only about a week out since it's only 1 day before July 8th. Now what you want to do, you want to go down and choose the strike price, preferably below the current share price. Now as you can see here, the current share price as of making this video is $13.79. So we're going to go down to the $13 strike price or the $12.50 strike price. Now the reason I'm looking at these 2 strike prices is because of the chance of profitability. Now the chance of profitability here is 70% and also 76%. So we're going to use, just for this example, remember it's only an example, we're going to use the $13 strike price. Now with the $13 strike price, we're going to get a 70% chance of profitability. We're also going to receive a $46 premium. Now in order for you to do a cash secured put, you need to have the equivalent of the strike price as reserves in your brokerage account. For instance, if you want to do a cash secured put at a $13 strike price, you need to have $13 multiplied by 100, which is going to be $1,300. Otherwise, you're not going to be able to do it. And I'm going to show you an example because I don't have $1,300 cash in my brokerage account right now. So let's go. We're going to go ahead and we're going to select the $13 strike price. We're going to hit continue and we're going to see what it's going to give us. So once you do a cash secured put, right away you're going to be receiving a $46 minimum credit into your brokerage account. Now, like I said, we always like to make weekly revenue, so we try not to enter any trades where we don't get a bonus right as soon as we place the trade. So right away you're going to receive a $46 into your brokerage account, and that money is yours to keep no matter how this trade goes. So how can this trade turn out? So there's a couple of ways the trade is going to go, but since I already have videos on cash secured put, I'm going to tell you the desired outcome in which we're looking for. So if on expiration date, which is July 15th, if charge point is trading at $13 or above, then we get to keep our $46 which we got initially, and we get to do the strategy once again for the following week. And this is how you could use this to grow your small account. Now, for those of you with the micro account, I have not forgotten you. Now, before I get into that, one thing we try to look for is a return on investment, or ROI, or 3% or more. Now, how do you get your ROI? In order to get your ROI for this particular trade, all you need to do is divide your minimum credit, which is $46, by the total amount of money you left as a cash, which is going to be $1,300. That should give you around a 3%. So boom, we hit the nail right on the head. So for those of you who have micro account, here is an account you can use. It's going to be Marathon Digital, ticker MARA. Now, once again, this is just an example. If you are trading with a small account, you will need to take more risk than other people with bigger accounts, just because you need to grow your small account more aggressively. Now, here we are on Marathon Digital, and now we're going to open up the Marathon options trade. So here we are on the Mara options chain, and once again we're going to go to sell and put, and we're going to choose our expiration date of July 15th once again. So now we're going to go look for a strike price that's going to be below the current share price. Current share price as of making this video is $6.83. So I'm going to be looking at the $6 strike price. Now with the $6 strike price, we're going to have a chance of profitability of 77.84 or 78%. Now, if by watching this video on the strike prices or chance of profitability sounds great to you, I do advise you go and watch my previous videos. So our chance of profitability is going to be 78%, and our credit is going to be $18. Now, to get the $18 is going to be 0.18 multiplied by 100 shares. So let's go ahead. We're going to click it. We're going to hit continue. And there you go. So we will be receiving right away, once we put this trade in, $18. Now, Mara is a very speculative, unstable stock. Now, the reason for this is because Mara is directly related to cryptocurrency. So there you have it. So the third option I would use during a recession would be what's known as a leaps option. Now, once again, I do have videos on leaps option, so I'm just going to go through briefly a couple advantages and a couple of disadvantages of the leaps option. So with the leaps option, one advantage is that you have to hold long term. The second advantage is that you're able to make weekly revenue. One of the main disadvantages is that it's a very long-term strategy. Now, if you want me to give you examples of stocks that I'm looking at in order to go into leaps option, just leave me a comment below and I'll be more than happy to make a video. So just a quick recap. The option strategies that I think are the best during a recession is going to be being cash heavy, holding enough cash and wait for an opportunity if the market presents itself. The second one is going to be cash secured puts, and that's the one I'm focusing right now. The third one is going to be leaps options. Now, we have lots more option strategies on this channel, so if you want to join the weekly income team, like and subscribe to the channel right now. Also, hit the notification bell below to get an alert whenever I post a video. But most importantly, share this video with someone you think that can benefit from its content. Let's help as many as we can. Remember, a salary will give you a living, but your investment gains will give you a lifestyle. Thanks for watching, and remember, always keep pushing your investments.